How's everybody doing today? You guys doing well? And the problem is loading my screen. I don't know why, so I apologize for that. Today's presentation is going to be Secrets of a Market Maker. I was a market maker on the floor of the Chicago Board Options Exchange for over a decade. You know, you go to a lot of these presentations and people give presentations. You know, I'm sure you guys have seen Ichimoku Cloud a couple times. I give a very good presentation of it. You know, but everybody does the Ichimoku Cloud. And then you see, you know, earnings, and you see people doing earnings, you know. So I wanted to do something different that basically no one out there can do, which is being a market maker. I was a market maker for over a decade, and what I learned from the floor, you know, I took upstairs. Basically simple and easy. I went to University of Illinois Champaign-Urbana. I graduated with a finance degree and then an accounting minor, and I got a job to trade. Okay, I never knew what I wanted to do with my life. My father told me, hey, maybe you should trade. It's fun, it's exciting, I think you'd really enjoy it. I was really scared, I was nervous. Sure. So I got a job, and then 9/11 happened. A lot of the traders lost a lot of money. They pushed me back. So I started trading. I started to be a clerk in March 2002. So I started clerking for 9 months to 1 year. I was making $2,000 a month. I was living at my parents' house. I took the 5:40 train every morning to Chicago, Union Station. Then I walked over, and then I clerked, okay? When you are trading, you either get it or you don't. You cannot fake trading, okay? Not everybody will be a successful trader. And I always say, you know, 90% is the number that I always talk about. 90% of all people that trade lose money. I started in a clerking program of 14, you know, graduating from anywhere from Illinois, Indiana. We actually had a guy in our class that went to Harvard. The guy from Harvard never actually got to trade, okay? The greatest thing about trading is, or one of the greatest things about trading, is you don't have to go to Harvard. You don't need that Ivy League education. You don't even need to go to college. You don't even need to go to high school, actually. Trading is one of those things that's just instinct. You either have it or you don't, okay? And within the last week, I sold more long positions than I've ever sold before. Today is the first day I've been short, net short the market in 2 years, okay? So trading is a lot on feel. I wish I could show you my trade log today. I probably traded close to 2,000 equity options and about 5,000 shares of stock. So when I started clerking, 9 months to 1 year program, how was it instructed? Basically simple and easy. I went down there, we had classes. Every single day we had classes. Every single day after the close, we had mock trading. What does that mean? That means we sat there and we got drilled over and over by the traders on every single type of situation. What happens if the price of calls if dividend goes up? What happens if the price of interest rates go up? How to properly hedge ourselves. Any circumstance and possibility you could possibly think of every single day. I was living at home. Then I moved to the city with my buddy every single night. He said, hey, let's go out, let's go out, let's go out. I'm 22 years old. I said, no, I need to study. I need to study over and over, okay? Because I knew this was my one chance to make it as a trader. Then I became a market maker. I was a market maker for 10 years on the floor. From 2006 to 2009, I was the largest independent Apple trader in the world, okay? I traded probably about 5,000 options a day, 50,000 shares of stock daily. I was huge. I didn't care if I was down $10,000 in one position because I'd be up 20 in another position. In 2008, my average P&L swing was $30,000 a day and close to $100,000 a week. As Morgan said, you know, I will give a webinar whenever I can, but I can not really do them during the day because I'm busy trading, okay? I started with a trading account this year, $220,000 in my trading account. It has $500,000 in it. And if I could have shared my screen, I would just show you my account, and I'm going to start taking pictures of it every day. I made about $8,000 today, and this is after commissions. So this year alone, I've taken a $220,000 account and turned it into $500,000, and that's after commissions. And when it comes to commissions, I trade a lot, so my commissions are very, very high. I probably paid just this year about $70,000 of commissions. $70,000 of commissions. So when I got accepted, there was 14 of us that got the opportunity to clerk. Only 3 of us got to trade. I can't share my screen right now for some reason. I can't share my screen, but I show all my subscribers my P&L on a daily basis. So when I got the opportunity to trade, I went into the General Electric pit. I was in 3 different pits on the trading floor. From the first day I was in the pit, I was nervous. I was scared, okay? And then day after day, I built up confidence. Every single year I made more money than the year before, and then I lost $484,000 in a company called AMAG, which is a biotech stock. I said to myself again, I'm never going to trade against the hedge fund. I'm going to follow the hedge fund. So I took everything that I learned from the trading floor, I moved it, quote unquote, upstairs. So I'm trading just like you guys. I have 2 computers and 7 monitors. So my name is Andrew Keene. I took my last $50,000 after I came back from Thailand. I took my last $50,000 and I turned it into $5.5 million. I was a market maker on the floor of the Chicago Board of Options Exchange for over a decade. The CEO of the CBOE, Ed Tilley, was actually my backer for over 2.5 years. He was a partner at my old firm, Boda Capital Management, and he was my backer for over 2 years. He is the CEO of the CBO. If that's not confidence, I don't know what is. He personally backed me with his own money. I have taught thousands of students to full-time traders. I'm a regular contributor on CNBC, CBOE, Bloomberg, Fox Business, BNN Canada, Sky Australia. They don't put people on TV unless they know what they're talking about, okay? They really don't put people on TV. Tomorrow I'll be on Fox Business, BNN Canada, and CBOE tomorrow, okay? So I'm a full-time trader now, but I'm just like you guys. I am just like you guys. I'm trading upstairs with monitors and computers. So, secrets of a market maker. Let's start with this. And I continue to say at every single presentation I do, this is the best time ever to trade options and to be a retail trader. I do a lot of research, okay? I watch a lot of DVDs, old school DVDs. It's like I could compare myself to like a basketball player who watches old school film of like Larry Bird and Magic Johnson. I watch a lot of old school DVDs. The markets used to be like $7 at $8 for an option. If you bought the offer for $8, you actually needed the stock to move like $5 just to break even on the trade. So today's market is the best time ever for retail traders. And make sure you guys stay till the end because we're giving away some DVDs from some courses that we did. We're gonna have some contests at the end. We're gonna give away some DVDs for free. So this is the best time ever to trade as a retail trader. Why? Number one, the markets are tighter than ever. This is the worst time ever for a market maker. I wish I was still a market maker on the floor, okay? Because I could make money every single year. I made more money than the year before. I knew how to make money as a market maker. However, now everything's electronic. The exchanges used to be the first place they would take orders. Now the exchanges are the last place they take it. So the markets are tighter than ever. The width of the market used to be 5 cents wide. You wanted to trade Apple, you traded with me, you traded out of my market. I'm $1 to $1.20, I'm 200 up. I'd buy 200, I'd sell 200. Now the markets are penny wide. Imagine going to Vegas, guys, and not giving the house any edge, right? Imagine going to Vegas and saying, hey, I want to be the house, okay? With penny wide markets, you can put on any position you want without giving away that theoretical edge. It is quite amazing and more liquid than ever. The markets are very, very liquid. Back in the day, they weren't that liquid. Now it's amazing, guys. If you guys are trading options, you watch new wave of technology, a new way of trading. I was a market maker, like I said, for over a decade. It was great being a market maker. When I moved to the computer, okay, upstairs, I became a market taker, not a market maker. I became a market taker. And, you know, I had a learning curve. It was different. I had to trade differently, okay? So now this is the greatest time ever for you guys to trade. Awesome time for you guys to be in the market in trading options. So why is this the best time ever to trade options? There are 8,700 stocks, 4,200 stocks with options. Of those 4,200 stocks with options, there are 300 stocks with weekly options. Unbelievable. okay? You wanted to trade an Apple event. They have an announcement coming up. They have earnings coming up. You trade on my market. I'm $1 to $1.20, 200 up in the front month. Now there's weeklies, 1 weekly, 2 weekly, 3 weeklies. There's mini options. If you're not a big trader, you don't want to trade one option for every 100 shares of stock, you can trade minis, okay? There's so many more products. It's unbelievable the things that they've come up with. When I was a market maker on the floor, I was in the pits. We had to have about 125 stocks in our pit. I could only trade 125 stocks. Now, I have the ability and opportunity to trade over 4,000 stocks every single day. I put on positions of stocks I've never even heard of. We work with a proprietary scanner that shows me every single trade across every exchange, and I allocate my capital on those trades. Today I made $1,000 trading MasterCard, $1,200 trading MasterCard. Today I made $2,000 trading Rig. So there's always opportunity. There's more opportunity, more stocks. I wish they had more stocks. I wish there's 8,000 stocks with options because it gives you more opportunities to put on trades. I'm a very active trader. I trade all day long. And I always say, you guys are looking for a mentor, you're looking for someone for guidance. I would ask them one of 3 questions. Number 1, do you trade real money? And most of the time, everybody says, yeah, I trade real money, okay? Number 2, can you show me a proven P&L statement? Show me how much money you make. I've made over $5.5 million being a market maker, okay? I know all the tricks out there. Simple, period, easy. I'm going to teach you all these at my workshop, okay? I'm going to teach you how to use the option market to your advantage, to start taking money from the market maker instead of them taking it from you. I trade now about 2,000 options a day. In my account this year, I've taken from $220,000 to over $500,000, okay? I've more than doubled my account this year. So that would be number 2. And number 3, what was number 3? Oh, go for someone that, how often do you trade? You know, you always say, how often do you trade? I trade every single second of every day. 8:30 to 3 o'clock, I never leave my computer. I don't want to miss a trade. When I was a market maker, you know, I was 25 years old. The older guys are like 40, which I almost am now. Would always go to lunch. They'd come back, I'd say, how's your $5,000 turkey sandwich? You never know when a good trade's going to come in. Well, today, MasterCard, I bought some puts for $240. They went to $270. $1,000 profit just like that. I use unusual option activity. Okay? But I'm going to teach you better ways how to take money from the market makers. A market maker is someone who is always quoting a bid and ask offer. Okay? He's always quoting bid-ask spread for a given market. A market maker is willing to take either side of the trade, hoping to profit on the bid versus the offer, okay? I compare trading to so many different things. This does not work for futures. It works for options, equity options, okay? So I compare this to so many different things, and one thing that I always talk about is bid and the offer spread, okay? In theory, the market maker just works like a currency exchange. Okay? The market maker just works like a currency exchange where they try to buy the bid, sell the offer over and over again. Think about it as a currency exchange. You go there, you give them dollars. They give you euros back. They have a spread. You go there with euros, they give you dollars back. And they're just trying to make profit over and over. This is what a market maker does. So the market maker makes a market. Let's say the DEES, 550 calls, or 25 bid at 25.30, 20 up. This means that any given point in time, the market maker is willing to buy 20 contracts for $25 and to sell them at 25.30. So they're willing to buy 20 at 25 and they're willing to sell them at 25.30. So they come in, they say, what's your market? You say 25 at 25.30, okay? So you'd be willing to take either side of this trade. They would either take the bid or the offer. There's not many places in this world where you could take the bid or the offer, okay? Think about it. You can't go into the grocery store, say, hey, you're selling chicken breasts for $3. How about I sell you my chicken breast for $2, right? Simple and easy. There's not many places in this world where you can go there and sell it. On the trading floor, I was a market maker. I made a bid and I made an offer. Why does a market maker be both a buyer and a seller at the same time? Let's look at a real world example outside of the option world. At a currency exchange, like you would see at an airport, you just displays two prices. You see Euro USD, 120, 125. This means if you wanted to buy euros, you'd have to pay 120. Okay, so you go in there and then you have dollars. They'll convert it to euros. Maybe you give them $100, they give you 120 euros. Somebody else goes in there, gives them 130 euros, they give you $100. Simple and easy. They make money on that spread, right? They make money on that spread. So they just want to do that over and over. And I'm going to teach you here, guys, that the thing is the market maker wants you around. They want your business, okay? They want your business. If they didn't want your business, then they want as many customers as possible. Just like a currency exchange. Currency exchange would have this ideal situation. There's 100 people lined up that have US dollars converted to euro. 100 customers lined up that have euro that wanted to convert to US dollars. And they just make money on the spread, okay? So the market maker, in theory, wants to make money on the bid offer spread. However, they can make money other ways, and I'm going to teach you guys how. So let's talk about how jerseys. You always know that you're going to make money on your LeBron jerseys and your Derrick Rose jerseys. Sometimes, you know, Jeremy Lin or let's say Dwight Howard, I went in, I didn't get mad, I didn't get discouraged, and I traded better than I probably ever have traded before in my life. I made $53,000 day trading. I netted out making $5,000, okay? So the market maker is just trying to buy the bid and sell the offer. In theory, they want customers lined up in the back of the room saying, I will sell you these for $25. They would buy them for $25. Another broker would come in and say, hey, I want to buy these for $25, $30. And they would just do it over and over again. In theory, that's not going to happen, but this is the goal of the market maker. So the market maker also makes money with wider markets. The wider the market, the better it is for a market maker. Think about profit margin. If you buy something for $25 and you sell it for $25, $30, that's not that much margin. Nowadays, it's 10-cent bid at 11 or 11 bid at 12. So this is why I continue to say this is the greatest time for a retail trader. And I'm going to teach you guys the secrets how to take this to your advantage and take money from the market maker. Realizing, guys, that this is just a marketplace. Anything in this world is worth the difference of what someone's willing to pay and someone's willing to sell it for, right? For example, how much is a house worth? And I say to myself, I think my house is worth $500,000. If I want to sell it right now, let's say I listed it for $500,000. Would someone come in and say, hey, I'll buy your house right now? Most likely not, okay? So why wouldn't someone say, hey, I'll give you $450,000? And then I'd come back and say, nah, how about we do $490,000? Then you'd go back and forth, and maybe you'd settle at $475,000. Options are the exact same way, guys. It's just a marketplace. A lot of times, I will take the market, okay? I'll just sell the bid or I'll buy the offer. But a lot of other times, too, I try to get myself the best fill possible. And I find this the most interesting thing out there, okay? If I go on vacation, if you guys go on vacation, think about it as a vacation. How many different times are you going to look at how much the flight costs, how much the hotel room costs, try to compare the hotel price on Orbitz, Expedia, Travelocity, Hotel.com, Yahoo to get the best price possible, right? Well, you guys should be doing the exact same thing in options, and you guys aren't doing it. This is going to save you hundreds, if not thousands of dollars to get filled at a better price. Yeah, kayak too. You always compare prices in travel. It's just market psychology. You're going to buy a flight. I look at flights. Why wouldn't you use that to your advantage and try to save money on the options? Why would I buy somebody's bid? Buy someone's offer or sell someone's bid if I didn't have to? I would want to get filled at a better price. And I'm going to show you guys the secrets in the workshop to how to get better fills. Don't leg into spreads. That's crazy. Why would anybody ever leg into a spread? I'm going to show you the tricks and the ways to take advantage, okay? Everything I learned for the 10 years I was a market maker, I'm going to share with you guys so you guys can start saving money. So the market maker can make money. Market maker can make money in more than one way. Generally, market makers can profit from the changes of implied volatility. I stared at implied volatility all day long, okay? That's all I focused on as a market maker. I did not care about a chart in the world. I did not care about a piece of economic data in the world. I traded implied volatility. That's how I make money. As a trader upstairs, don't think that way. Implied versus historical volatility matters for a market maker, not for a retail trader. Let's look at an example of something here. A market maker sold 20 of the Facebook April 70 calls for $3. Okay, they sold them. You bought them from me. Okay, you bought 20 of the Facebook April 70 calls for $3. The first thing that I do as a market maker, I hedge my position. How does a market maker hedge a position? They hedge a position with stock. So if I sell 20 calls, I would look at the delta. 20 times 50. So I would just buy 1,000 shares of stock to hedge myself. So let's say you guys buy 20 Facebook calls from me for $3. I would then go buy 1,000 shares of stock to hedge myself. The market maker, in theory, always wants to be delta neutral. Just remember, guys, the market maker wants to make money on implied volatility and buy back at cheaper volatility. The market maker also makes money on theta, which we're going to go over in a second. So if I buy 1,000 shares of Facebook, let's say 1 week goes by and Facebook stock has not moved. The implied volatility now drops to 35 and the calls are trading a lower price. Boom, I just made money, okay? You lose money, I make money, okay? You got to realize, guys, that market makers stare at implied volatility factors that as a retail trader, you don't need to know. Okay, let's look at this example. Let's say the Facebook, I bought 1,000 shares. Let's say Facebook goes down $2, okay? Let's say Facebook goes down $2. I just got to do this math in my head real quick. So let's say Facebook goes down $2. Let's say these calls go from $3 to $2, okay? Facebook goes down $2. I bought 1,000 shares of stock, okay? I bought 1,000 shares of stock down $2. So as a market maker, I would lose $2,000 on that on the stock portion. Let's say the calls go, let's say they go to $1.50. Let's say the calls go from $3 to $1.50. They go from $3 to $1.50. I would make $3,000. So I can still be profitable if the stock goes down, okay? So I can still make money if the stock goes down. Realize that the market maker is going to make more money on implied volatility, theta, and also implied volatility and theta, okay? So this doesn't matter on you guys. You know, most retail traders, I trade directionally based. The market maker shouldn't matter at all. Also, time decay. The market maker makes money on time decay. Think about options as an insurance policy that you buy. You may pay for car insurance premiums once a month, but actually you're paying them every single day, right? If you pay car insurance, let's say I pay $150 for this month for car insurance. I'm actually paying $5 a day. So if the price of the option goes up, okay, you make money because you bought the option, you're going to sell it back to the market maker. They can still make money on that theta, okay? They can make money on that theta. So there's so many different things that you guys don't realize, which is actually going on. Market makers don't care. They want you to make money because if you make money, you come back. The market maker can actually make money if you make money, and that's on theta and implied volatility, okay? Let's say in the example of Facebook. Facebook goes up $2. The calls go from 3 to 320. You just sell your calls that you bought for 3 to 320. So you made 20 cents on 20 options, right? That's $400. Boom, you made 20 cents on 20 options. You're like, I got that market maker. I made 20 cents off him. What did he do? He bought 1,000 shares of stock. If the stock went up $2 and he bought 1,000 shares, he's going to make $2,000 in the stock minus the $400 he's going to lose on the calls. So he's actually still going to be net profitable, okay? So just realize, guys, that the market maker can make money with you, okay? They want you to make money. Stop thinking that the market maker doesn't want you to make money. They don't care about your stops. They don't care. They want you to make money. Because if you make money, you come back. They need customer business to survive. Just like a jersey store, just like an insurance company, just like a currency exchange. They want it. So who can be a market maker? When I got my start on the floor, I went through a training program that could have taken me a year to complete. During that time, I sat in class every single day, took tests once a week, and prepared my trading after the close. The point of trading was to learn every single way a market maker can make money. Dividend plays, you guys don't even realize that. You're leaving money on the table if you have deep in the money calls that you're not exercising because of a dividend. If you're long deep in the money calls and there's a dividend and you do not exercise those calls, you are losing money, okay? I'm going to show you 6 to 10 different ways how you guys, if you're trading options, you are leaving money on the table. Hundreds, if not thousands of dollars. If the 14 of us, there was 14 of us that started, only 3 of us got the opportunity to trade. Since then, markets have changed, and being a market maker is not as profitable, okay? I wish I could still be on the floor trading an Apple, 200 up. It was like a big fraternity house, but you got to move to the new way of trading. The new way of trading is trading upstairs with computers, with monitors. I am a market taker now more than I am a market maker. Ooh, sorry about that. So why is this the best time ever for a retail trader? When I was trading on the floor, I was the biggest independent market maker in the Apple pit. I wish I still could be there. But times have changed. This is the worst time ever to be a market maker and the best time ever to be a retail trader. Why? Markets are tighter than ever. Anybody with an internet connection or a smartphone can start trading immediately, okay? My overhead trading on the floor was $8,000 a month for my seat lease. So I had to make 100 grand just to break even. Okay, I need to make 100 grand just to break even. Now, internet, Cogent, 400 bucks. What else do I have? An office, you know, whatever your office costs, 1,100 bucks. Office, 1,100 bucks. That's all you need. Boom. Okay. The trading floor used to be the best place ever to trade. Now it's upstairs. But I'm going to teach you guys how to take money from the market maker. Okay. How you guys. I guarantee you everybody here that trades options is leaving money on the table. One of the 6 to 10 ways I'm going to teach you at our workshop, okay? You guys are leaving money on the table. Markets are penny wide. They used to never be penny wide, okay? This is the best time for all of you to make money trading, and I will teach you the skills that you need to start taking money from the market maker now, okay? This is all the secrets that I learned from the trading floor, and I'm going to teach you all of them. The market maker secret, okay? The market maker actually wants you to make money, okay? 90% of all traders lose money. The market maker wishes everybody made money, okay? Want to know why? Because there'd be more customers. There'd be more business. Because they're just trying to profit on that bid-offer spread. The market maker is not out to get you, okay? They don't run your stops. They don't try to, you know, force you to make bad trades. They want you to make money. Because the more customers, the better it is. Just like the currency exchange, guys. The currency exchange, why are they at the airport? Because that's where the most customers are, right? Currency exchange are at every single airport because that's where the most customers are. They want you to make money. You can keep coming back and back and back. In theory, my goal would be buy an option for $1, sell for $1.20, 500 times. Simple and easy, right? I just make money 500 times. So the first thing a market maker does after taking on a position is they hedge themselves with stock, okay? Let's look at an example on the next slide and break down how the trade turns for both the market maker and the trader. I am the market maker. You guys are the trader. Simple and easy. A market maker who sells 20 of the Apple D550 calls for $25.30. Let's say the stock is trading $530. As a market maker, I would go hedge myself on the delta, okay? Every single option has a delta. Delta is a percentage chance of being in the money. So let's say the D550 calls have a 50 delta. So you come in, say, Andrew, I want to buy 20 of the D550 calls from you. How much can I pay for them? I say, hey, pay me $25.30. You go, okay, I'll buy 20 of them for you. I sell you 20 of those calls. I then buy stock delta neutral. So I buy 1,000 shares. So the market maker, in theory, is always managing their position delta neutral. Let's say 1 month goes by. The stock has rallied $5. Okay, it's gone to $5.35. Let's say those D550 calls are now trading 27 bucks. Did you make money? Of course, because you bought 20 calls for $25.30 and then you sold them for $27. So you made $1.70 times 20, 3,400 bucks, right? You bought them for $25.30, you sell them back, you make money, $3,400. You're like, I got that market maker. No, but the market maker actually made money too. How is that possible? And let's go over the math, guys. So the market maker isn't out to get you. They want you to make money. Remember, the market maker sold these calls to you for $25.30, but then also to hedge themselves properly, bought 1,000 shares of stock at $530. The stock has moved up to $535, and the D550 calls are now $27. So the market maker sold the calls for $25.30 and bought them back for $27. So they lost $1.70 20 times. $3,400 they lost. But they profited on 1,000 shares of stock, $5. So the market maker actually net profited $1,600. The guy who bought the calls made $1,700. The market maker made $1,600. And you say to yourself, how can the market maker make money and I can also make money, okay? And what are the 3 ways that we've learned? Time decay, bid-ask spread, and implied volatility. In that month, what you don't realize is that you paid theta. Theta came out of these options, okay? That's number 1. Implied volatility might come down. You don't care about those things, and you shouldn't care about those things as a retail trader. You don't care about implied volatility. You shouldn't care as much about theta. But the market maker has ways to make money, and we're going to turn it on them. We're going to teach you the ways to take money from the market maker. So we can see both parties made money in this transaction. The market maker isn't out to get you guys. So I will teach you the ways to take money from the market makers like me, simple and profitably, okay? You can see here, that was my backer. This was in the Apple pit, and this is me on the floor with the shaved head. I'm not the guy with glasses. This is the only picture I could find of myself on the trading floor. You see all the screens in the background. And from 2006 to 2009, in the Apple pit, I was the largest independent trader in the floor. What does that mean? We had 18 traders in our pit, and I was the largest trader in Apple. You came in there, I was the biggest size, okay? So I didn't look at a chart when I was on the trading floor at all, okay? I didn't look at it at all. And I just looked at implied volatility, and I looked at theta. I looked at all the Greeks, but as a retail trader, you don't have to look at this. So remember that in order for a market maker to keep making money, they need you. They need customers. So the market maker actually wants customers to make money and stay in the game as long as possible. The market maker isn't concerned about running your stops or squeezing out your positions. They make money in more ways than you know: time decay and implied volatility. So we have a workshop, special topic course, how to start taking money from the market makers. And I'll make sure I will answer any question you guys want. Understand who controls the order flow. Okay, the market maker doesn't control the order flow. Understand who does, which is the institutions. The market maker is trying to allocate the option pricing. They don't control order flow. The institutions, hedge funds, mutual funds, retail banks, and big traders control the order flow. Understand implied versus historical volatility for a retail trader. Okay, why it matters for a market maker, but why everybody as a retail trader shouldn't be worried about implied or historical volatility. Learn how to quote unquote gamma scalp and lock in profits when the market is closed. I had a position in SYY. I was long calls. The option didn't open till 8:30, but in the morning they said SYY might get bought out. I sold stock to lock in profits, okay? I sold stock to lock in profits. So I'm going to teach you guys how to make money potentially even when the option market is closed. And every single day I would be scalping Yahoo after the close because there's always a possible deal going on with the Yahoo thing. Okay, so you guys can take advantage of the fact that the option market is only open from 8:30 to 3 Central Standard Time. I have positions on right now. What happens if SUNE gets bought out for $30 and I want to lock in profits? And I'm going to teach you guys how you can use stock in after-hour session to lock in profit. Use stock to lock in profits in the after-hour session. I'm going to teach you guys the spread book for getting better fills. If you are a spread trader and you don't use the spread book properly, you are costing yourself hundreds, if not thousands of dollars. No one should ever leg into a trade. I will walk you guys through the spread book and show you guys Goldman Sachs and Citadel has something called an electronic eye, which means they will fill you at a better price, okay? The problem that most people do and why they lose money trading options, simple and easy. Stop buying the offer and selling the bid. It is a marketplace. What does that mean? That means if someone's offering it, you're not just going to say, okay, I'll take your offer. You're going to try to bid it. You're going to try to bid it at a certain level. And I'm going to teach you guys those tricks and those secrets how to always get filled, especially in spreads. If you guys are a spread trader, this is going to save you hundreds, if not thousands of dollars. Learn how to never give up money you don't have to, okay? So many of you guys are losing money. On commissions, you're paying too much on commissions. I guarantee you that right now you're paying way too much on commissions. I'm going to teach you guys how to get your commissions lower as well, okay? Everybody shops everything around, but for some reason, no one ever shops the option market around, okay? For example, today in SUNE, a market on some calls was 143, 150. I got filled at 148, and I'm going to teach you guys how to get filled at better levels, okay? Stop paying the offer and selling the bid if you don't have to. Spreads, it works great as well. I'm going to teach you guys these secrets. So we have this course, and the price is only available for the first 200 students. We will sell out of it, and it's $97. You can click the link below or sign up. It's optionsonthefloor.com/buy, okay? 4 things I'm going to say about this workshop, okay? This workshop is going to be 2 hours long. It's going to be at the end of the month. Number 1, this workshop will 100% sell out. We sell out of every single workshop we do, okay? This workshop will 100% sell out. Number 2, this price is only available for the first 200 students at $97. I wish I could bring up my screen. We just put it up on our website. It is double the price on our website. So we're offering on the website for $197. So you don't get in this price for $197. We're going to sell out. Number 3, 100% money back guarantee. Every single workshop I do is 100% money back guarantee. If you go to this workshop and you go, I didn't learn something trading options to save myself money, okay, then we'll give you your money back. We just refunded, I think, 3 people $500 on the Ichimoku course. They said, hey, you know what? I didn't learn enough. Fine, have your money back. You guys, if you guys trade options, this is a 100% no-brainer. It's $97, 100% money back guarantee, and this course will save you hundreds, if not $1,000 in A, commissions, B, getting the best fills possible. Okay, I'm going to teach you all the secrets to getting the best fills possible. It's 100% money back guarantee. That's for the platinum if you want to take the platinum. If you buy the course, we offer the trading room as a platinum as a if you guys are interested in that. If you're not interested, you don't have to do that. Okay. So we will sell out at this price, and I'm going to ask a couple questions. We're going to give away some DVDs here, and if you guys have any questions at all, please let me know. So let me look up a couple questions. I have a good question I'm going to ask right now. Whoever gets the first answer right, we'll send you a free DVD in the mail for the Unusual Option Activity Workshop. The link is incorrect. Let me click on it myself. I'm looking at clicking it on myself. That is the wrong link. Let me see if I can get you a better working link. We'll give you guys this one. I apologize for this. That is the wrong link. KeeneOnTheMarket.com/market maker. So let me just change this here. Sarah, you can click that link. I apologize for that. KeeneOnTheMarket.com/market maker. Yeah, that is the wrong link. KeeneOnTheMarket.com/market maker. Just sign up for it here and you'll be fine. Market maker. Maker. I spelled it wrong. Let's take that one down. Yeah, there you go. Thank you. It will be, let me look at the date of it. There you go. Market maker. The workshop will be on, thank you, market maker. It will be on April 3rd. So do you guys have any questions at all about anything about being a market maker? We're going to give away a couple free DVDs here. So let me give you a couple free DVDs. First person to get closest to this answer, we're going to give away a DVD here for Unusual Option Activity DVD. We'll send it to you in the mail. The question is, whoever gets closest answers, we'll give this away. How many full-time employees does Starbucks have? How many full-time employees does Starbucks have? Let's see what we got. We got someone close. Anything around 180,000 I will accept as a good answer. I don't see any. Ray F. Ray F was the first one to come close at 180,000. If you can just email thankyou@KeeneOnTheMarket.com. We will send you a free DVD for the Unusual Option Activity Workshop in the mail. You can just email thankyou@KeeneOnTheMarket.com. Did I write down on the right link? Thank you at KeeneOnTheMarket.com. If you can just send us that, and that was Ray F. If you can just send us your address. And the second one, okay, we'll give another DVD away here, guys. Let me think of a good question. Ooh, this is a good one. How much is Tesla's market cap? How much is Tesla's market cap? 31 billion. Boom, I'll take that. 31 billion. First close answer. Very good there. Tim H. Tim H. Tim H. So if you can just email your address to thankyou@KeeneOnTheMarket.com, we'll send you an Unusual Option Activity workshop, the Unusual Option Activity DVD for free. Tim H. And we're going to ask one more question for a free DVD. If you guys have any questions about how market makers work, how they make money, just let us know. Okay. Next question. I want to do something with this one. Let me see real quick. Ooh, this is a good one. Who is Apple's CFO? Who is Apple's CFO? CFO for Apple. I've actually never heard of him. Oh, hold on, I'm getting answers. Valerie Moore. Very good. Very good and very quick. Valerie Moore. Peter Oppenheimer. You can just email us. Thank you at KeeneOnTheMarket.com. He might be retiring, but he's listed on the Google thing. Thank you, not thank you. So let me put this link in again. You guys can sign up here. So basically, when I was a market maker on the floor, this is kind of what happened, the gist of everything, the nuts and the bolts, okay? So I went and I started trading for a company called BOTA Capital Management, B-O-T-T-A. It stood for Best Option Traders There Are. Yes, these people were cocky. We had 100 traders on the floor, and these guys are the best traders I've ever seen. Over the course of 12 years, I've traded with a lot of people, and the guys at my trading firm were the best, period and simple. Someone had to say to me, give me the six best people of anybody you've ever met that knows how to trade. I would pick 6 guys from BOTA, okay? I would pay 6 guys from BOTA. What happened was the firm went insolvent. Unfortunately, the firm went insolvent. Ed Tilley, who's the CEO of the SIBO, him and another gentleman, the guy in the picture with the glasses, said, hey, you know what? We'll back you ourselves. We will back you ourselves. So me and this other guy, we joined a group called Cattle Group. Stood for Keene, Andrews, Tilley, Luce, as all 4 of our names, and I traded with them, okay? And I made millions of dollars trading with them. Trading on the floor was different. It was amazing. It was a rush. It was a high. You know, people always want to know, what was your worst day ever? What was your best day ever? Okay? Worst day ever, I lost $180,000 in CECO. CECO, I lost $180,000. I was short a bunch of puts, and I lost $180,000. Let me see if I can. Let me just go back. So I lost $180,000. Just trying to take this thing down. So I lost $180,000. That was my worst day ever. My best day ever, okay, I made almost $500,000 trading Apple. It was the day where the market was down about 600 points and then reversed to unchanged. So my best day ever was a lot better than my worst day ever, okay? Okay, so every single day it was, no, I actually have never done cocaine in my life before, but that's a very good question. That's a very good question. There was actually a couple brokers on the floor that unfortunately had a drug addiction, and they would go into the bathroom and do cocaine every single day on the trading floor, which is actually pretty sad. You know, back in the 90s, they said everybody did cocaine on the trading floor, and they said you were a bad trader if you did cocaine on the trading floor because you'd have to put your nose down and you missed a trade, right? I mean, there's a lot of people that did a lot of different things on the floor. You know, people, you know, basically would, you know, there's people that cheated, you know, ran around with people, but, you know, they get bad reputations. You know, a lot of people get bad reputations of the trading floor itself. So you guys have any other questions? Yeah, what was the bid ask for it then? KeeneOnTheMarket.com/market maker. KeeneOnTheMarket.com/market maker. I'm going to try to load this thing if I can really quickly. See if I can load this presentation here again. Let me see, slides. How do I load this presentation in? Can I try to load it again or no? How about I just write in the whiteboard? So it's www.KeeneOnTheMarket.com/market maker. And this will be, a 2-hour workshop. So a couple of things here. It will 100% money back guarantee. You will learn how to save money on options, on commissions. Okay, you learn how to save money on commissions, on the spread book, on the bid and offer. Okay, so the workshop will be a 2-hour workshop. You can buy it at KeeneOnTheMarket.com/market maker. 2-hour workshop, 100% money back guarantee. We will sell out at this level. It is available on the website. It's double the price. We will sell out at this level. It's $97. If you want to buy it on the website, you can. It's $197. We will sell out at this level. It's only $97 and 100% money back guarantee. You will also get 8 hours of recording. Okay. So you'll get 8 hours of recording. You'll get this webinar. You will also get recording for the workshop, and you'll get 4 opening bells of watching me trade live. 4 opening bells of watching me trade live. So you get all of that included for that price of $97. You guys should save yourself hundreds, if not thousands of dollars on the things that I'm going to teach you, okay? Hundreds, if not thousands of dollars you guys should learn if I'm not going on things that I'm going to teach you how to start taking money away from the market maker, okay? Sometimes I hit the offer, sometimes I hit the bid, but a lot of times I go in between. And I know all the tricks of the trade to figure out what the best trades are, okay? And I've taught everybody this, but we're going to do this in a workshop form for over 2 hours. So do you guys have any more questions about anything, about being a market maker, about trading, anything like that? I'm here to answer questions, makes me feel smarter. Do you guys have any questions at all? So let me tell you a little story. Yes, this will be recorded. Let me tell you a little story before the trading floor, okay? Okay, this is how institutional order flow works, and this is how I create an unusual option activity, okay? When a trader comes in and makes a trade with us, okay, first of all, how does this start? Okay, they come upstairs, there's a big hedge fund, they have 8 analysts, 10 analysts, and they come up with a trade. They tell the option trader comes up with a trade, right? They call the broker, say, this is what I want to do. They go down to the floor, they make a trade. Simple and easy, right? From there, okay, one of 2 things. A trader is making a trade as speculation or a hedge. That is it. Speculation. If they are buying calls, they're speculating to the upside. A hedge. If they are buying calls, they're taking a hedge against a short stock position. My goal is to always find the orders that are a speculation, not a hedge. What does that mean? Okay. That means when I am watching every single day long, okay, I want to take the trades that are speculation, not a hedge. Simple and easy. We had a trader. We had no idea who this guy was. He could have been Warren Buffett, or he could have been a guy in Omaha trading at his computer. Once a week for a year and a half, this guy would come into the Apple pit and sell bull put spreads in Apple. What does it mean if he's selling bull put spreads? This means 2 things. A, he's getting long the stock, and B, he's selling implied volatility. I got so good at knowing this that every single time this guy would come in and sell bull put spreads, I would get long Apple, okay? I made almost $1 million trading Apple, not 1, but 2 separate years. And I thank this guy. I mean, he showed me his position. He knew where it was going to go. Another example, I traded a stock named WellPoint. WLP. So if the market maker sells put spreads, he buys stock to hedge himself. Well, if the trader sold put spreads, then the market maker would buy put spreads, which means they were getting short deltas. So to hedge themselves, they would buy stock. But as a market maker, some market makers, you know, they're kind of frugal. They're kind of, I always need to be delta neutral. I wasn't like that. I figured out what the best trades were, and this is how I base all my trading now on an unusual option activity. I figured out what the best trades are, and then I personally, you know, allocate my capital to that, right? So every single time for the first month, I didn't ever get long when this trader got long. But eventually I realized, God, this guy's really smart. So I would get long Apple, and it worked every single time. Let me show you a different example. In a stock called WellPoint, WLP, a trader would come into the pit. They would buy calls. Stock sold off. Next month, come in, buy calls. Stock sold off. I go, this guy is getting crushed. He's losing so much money. Third month, comes in, buys calls. Stock goes down a third straight time. I go, how can this guy afford to do this? because he just keeps losing money. Well, the thing you don't realize is you never know a trader's stock position, okay? So I just try to allocate my capital with the best trades possible, okay? So one more thing here. We're going to have about 5 minutes. I'll answer a couple questions. We're going to send those 3 free DVDs out. So make sure you guys email us. You can sign up for the workshop at KeeneOnTheMarket.com/market maker. It's a 2-hour workshop, 100% money back guarantee, okay? I'm going to teach you guys how to save money on options, commissions, spreads, bid and offer. We will sell out. It's $97. If you want to come on my website, you can go buy it for $197, and you will also get the recording. This is live. It will be a live workshop. You get me in live. So if you guys have any questions, please let me know. If not, I appreciate you guys all coming here. I appreciate you guys coming. And I will see you guys soon. This is our new topic. We are doing it at Ichimoku. You know, nobody out there can give you these secrets, because I don't think there's anybody in this business that was a market maker, okay? Everybody learned how to trade upstairs. So I know these secrets that nobody else knows, and I'm going to teach you guys to them, okay? I'm going to teach you guys these secrets of the market maker business. Thanks, guys. Thanks, Morgan. And if you guys have any questions, let me know. If not, we'll call it a wrap for today.